Welcome back to another episode of Real Estate. Recently, Edgeport published an international property supplement that covered key overseas markets that are investment hotspots amongst investors this year. In this episode, we're going to cover the differences between investing in the local market and overseas real estate markets, as well as factors that new and experienced investors need to be aware of this year. I posed my questions to three leading industry experts: Chua Shi of JLL, Clarice Lau of Knight Frank, and
Alan Chong of Savills Singapore.
We observe safe haven jurisdictions with lower barrier to entry provide an attractive opportunity for investors seeking for higher returns, be it from recurring income or capital appreciation.
I think what overseas market does offer would be some alternative options that perhaps have lower barrier of entry, such as lower buying costs, lower acquisition costs, or perhaps more simplified tax.
There has been more and more regulations pertaining to buying Singapore private residential real estate. Some investors think, hey, why don't I look overseas where I may not be subject to such regulations such as the additional buyer stamp duty and also the seller stamp duty.
Always do your research, that's very crucial. And then next, have your finances evaluated and ensure that you are not going in over leveraging so that you have the right risk appetite to enter into the market.
It is important for new investors to keep themselves informed of the market that they are interested in with the latest regulations, policies, news and market insights so that they understand the current market condition and expected market condition.
What is the investor's objective in buying? Is it one, for own use? Number two, for a vacation home? Or number three, is it something that they want to buy for their children's pursuing their education? And number four, is it a case of wanting to lease it out for investment, i.e. passive income?
Vietnam has been increasingly popular with its highly young population, alongside a manufacturing boom, low cost of living and affordable property prices. The next market to watch out for is Indonesia. Indonesia has strong fundamentals with a growing domestic affluence along a high population and recent easing of foreign real estate law with right to build and right to use certificates.
UK is definitely one of the top choice for many investors because it gives an array of products, whether you're looking at investment in regional cities such as Manchester, Birmingham, or you're looking to purchase for kids' education in central London. We have also witnessed quite a good investment opportunity in markets such as Japan in cities like Tokyo and Osaka. Europe countries in Germany such as Berlin has also proven itself to be a quite attractive hotspot for our local investors.
This year, concerns over interest rate hikes and upward inflationary pressures have made headline news each month. We've even seen familiar asset classes such as equities and some commodities hit by market volatility. Even the crypto markets experienced their so-called crypto winter in the first half of this year. Real estate markets are not immune to these market volatility and short-term shocks. I asked our experts to weigh in on the impact of these macroeconomic forces while investing in real estate this year.
Real estate today is a hedge against inflation because inflation has disrupted the supply of real estate, whether from developers launching the product or contractors failing to deliver the product on time. So that creates an artificial short supply situation in the short run. That shortage is creating that ratchet up effect on prices. So much so that yields can come down, but prices hold or even go up.
Key real estate markets with strong fundamentals such as political stability, strong growth and strong local demand are likely to be more insulated from rising borrowing costs than other locations.
Real estate returns tend to be very closely related with inflation over other assets, and thus it is a very good hedge against inflation. I would say it's definitely a good asset class to be part of the diversification by any investors.
The Federal Reserve has recently increased interest rate by 0.75 percentage point, which is the 4th time this year, taking its benchmark rate to a range of 2.25 to 2.5%. So the impending rising interest rate serves as a reminder to investor and mortgagee to be prudent in their financial assessment.
Overseas, outside of Singapore, interest rates for mortgages tends to be higher. The buyer has to do his sums properly, build in a buffer before he commits to an overseas property purchase.
With a high interest rate, that will translate to higher mortgage costs. But in terms of property values, I don't think it's something that they have to worry too much about it, because usually if the economy does grow, earning incomes as well as rents does correspond with the increase as well, that shouldn't affect too much about the property values.
Singapore, London, New York, Sydney and Tokyo are considered safe haven markets and continue to remain attractive to investors amidst current market volatility.
Most of the time, the developed countries with a very strong economy, such as UK, Japan, Germany, they tend to have the ability to ensure the capital appreciation for the real estate market in the long run.
Developed economies, the United Kingdom, for example, is well managed. Countries like that gives investors the confidence that they are probably the safer places to go to.
Our international property supplement covered 8 different markets, from nearby countries like the Philippines and Indonesia to familiar markets like London and Japan. With so many different countries and regional markets to choose from, finding the right property type and geographic market can be daunting for new and even experienced investors. Each of our interviewees gave their advice on how investors can get started on their investment journey this year.
So this is subjective to each investor's profile. It is important for investors to understand their risk appetite and financial planning after evaluating their investment goals.
Yields are definitely critical for your survival of your portfolio because you want to have a positive cash flow. But at the end of the day, I would say capital appreciation is the crucial part because you want to ensure you have that huge gain.
For own use, generally yield is less of an important factor. But if it's for investment, then yield is important because when you try to exit the property, you are trying to expose the property to all sorts of buyers, whether for own use or for investors. It depends on, again, what is the objective of the investment.
Buyers should establish their property acquisition objective, whether it is a lifestyle investment as a holiday home or retirement home, or just purely for investing, not for own use. For example, a buyer would like to purchase a property in London for a steady yield and long-term capital preservation. However, another buyer may consider to purchase a property in Bali for their holiday getaway home, at the same time riding on capital growth potential on that property.
If you're looking at it from a holiday getaway, then perhaps it may be important to look at it from a yield perspective, and your holding period may be shorter. Then retirement will also depend on what age you intend to spend your time overseas.
It could be for kids, it could be for investment, it could be for retirement home. So it's good to be clear at the start what exactly you are looking for. Be clear of your objective and at the same time be logical about the investment so that you can ensure that you have a happy journey throughout.
We hope the insights from our 3 interviewees has been a useful introduction to you to invest in overseas properties, as well as the investment decisions and market risks that accompany this type of property investing. If you're keen on starting this investment journey, there are many consultancies and marketing agencies that can give you the right advice. Or you can read our international property supplement at hprop.sg/overseas. Thank you for watching another episode of Real Estate. Real opinions, real statements.